Good morning, everybody, and this is your S&P 500 day trade setups for today. Before we get to the day trades, I just want to highlight something here, and I'm on the monthly chart here. So what I was looking for over the weekend is just looking where we have a trend line break, and I'm looking for a diagonal trend line break. Okay, so and going back as far as I can, because those are normally the situations where you need to pay attention to. So this is the first one here, and you can see that, the trend over the years since 2010 has just, we sort of got above the moving averages, and then we sort of carried on gradually going up and bouncing off the moving averages as we go along. Now, just have a look at the divergence forming here from this swing low here from the when was that? That was COVID. So the COVID fall, and look at the low there. Look where the oscillators are heading at the moment. So there is a massive amount of divergence that's brewing. The second thing is we coming back to this area where this trend line is, and it's somewhere in the area of 3900. Okay, so 3900 is a fairly interesting area that we need to pay attention to. We do have this engulfing. We've got a tweezer bottom, then we've got a golfing, so that move was all sort of null and void. But if we drop down to the weekly, and you're going to see how this level is being respected. You can see how the support was found here, and at the moment we're sort of heading to the downside. So one of the narratives at the moment in the market is that is a head and shoulders. Okay, it does look like a head and shoulders, but in my experience, when it comes to the US market, I take that with a pinch of salt. I don't think that is going to be anything significant or any form of head and shoulders. This area here will definitely give us some support. It's not exact because of the length of the line and on the higher time frames, but anything between 4,000 and 3,900 seems to be the area that we could potentially be aiming for. And what that actually does, and if you do that, and I take that there, sort of opens up a call it a flag, call it a channel, a bear channel, whatever you want to call it. But I think at the moment what we're looking at is this area is of significance that we're in at the moment, and that's at 4,100, and then the next 200 points down is also of serious significance, so that's 4,000 and 3,900. Okay, so with all of that noise in your head, let's pay attention to what's going on here. So last week we had a pin bar off structure. We haven't quite dropped below it, and I'm just going to adjust that to there because we're sort of flirting with it at the moment over here. But what we're looking for is, if that gives way, then 4,000 is your first target. Okay, and we're so close to 4,000 at the moment, and then 3,900 would be your next target. So any drop at the moment is probably 100 points on the index, which is on my chart here with my leverage, it's 1,000. 3,900 would be around 1,500 pips to the downside, so another 4% move, 3.8% move to the downside. So that's kind of what we have brewing at the moment. On the 8 hour, strong moves to the upside and rejection, and obviously that is the next significant level we need to pay attention to, and that is 4,300. So break above 4,300, then we're probably looking at this trend line at 4,550 and then higher. But until that happens, we are sideways right now. You can see there's the bottom of this range, there's the top of the range. So I'm calling it a range, and there's a reason I'm calling it a range, because look at that. Big up, big down, strong buying off the bottom, strong selling off the top. That is a clear range. So pay attention to the macros at the moment, because it does give you an indication of potentially what's going on. And then what you have here is you've got a bit of diversions as well. So you've got a double bottom on price, and look what's going on with the oscillators diverting. So that's also an indication that this could be a potential range. Drop below this level today of 40.62 and get a close below that on the daily, then you've got another strong move to the downside, probably as far as 3,800. I think 3,800 is more than likely. There'll be a substantial amount of buyers waiting down there. Okay, so let's get down to what we can trade today. So Friday was a pathetic day. Pretty much just meandering low, didn't get up to reject any levels, and just lots of up and down and craziness. So we've got a big engulfing bar here, fairly close to the swing low here, and then now we've got a gap down and nothing really else happening at the moment. So I think this confusion is going to continue. This kind of price action you can't trade. So for me, you're looking at the 15 minutes, and you can see 15 minutes on the S&P with just rejection. For as long as we're below the 155 EMA on the 15 minute, the trend is down. Look at the oscillators now, grouping far apart. So I suspect another move to the downside, but be wary. So all your round numbers are going to be targets. So it's going to be 40, 50, 4,000 definitely would be a target, 3,950, and then 3,900. Those are the targets that we would see to the downside right now. So trend is down. You're looking to sell off structure. First bit of structure is obviously the gap. And what you want to do is keep your stop. Put that trend line in. I would keep my stop above the 155 EMA, to be honest. So it's like a 300, let's call it like a 400 point stop loss for a at least this level first, so for 500 points gain, and then a 700 odd point gain. So that's kind of the view that I've got at the moment. So gap close first, rejection, gap close should form a bit of a trend line on the 50 minute here, which should give you an opportunity to short. And if you can get the price action there, you can see 366 points for a move to the downside. So that's kind of my view on the S&P at the moment. Just be very cautious, because we're getting very close to some significant levels where you never know what's going to happen at those levels. A lot of people could just be waiting. You don't know what the Feds are actually trying to think, what they're thinking at the moment. So pay attention to the structure. That's my rule for today. Looking to get back to the gap, looking to get a rejection off there for a move back down. And this is a really tight range. You could probably, if you've got time, you could probably play it on the 5 minutes as well. Although you can see Friday was chaotic. There wasn't an opportunity there. But any move back into this area, rejection, you're looking for a continuation to the downside. And if you look at the 5 minute oscillators at the moment, starting to separate, so you're expecting some kind of a squirt up back into this zone. Okay, so that's kind of my view today. Looking to sell, trend is down. If we start breaking above the highs of Friday, which is around here, let's just get that level, 41.58, 41.60, then you're not looking for shorts anymore. You're looking for the moving averages to cross over, and you're looking for structure, and then you're looking for it to build to the upside. But at the moment, any rejection here, so long as we stay below the 155, you're looking for a continuation to the downside. Just pay attention to your big weekly levels here and your round numbers, because that is what's going to hold up price. Okay, hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.